What's up, everybody? Chris over here, founder and head trader at PollinateTrading.com. And today we're talking breakouts. We're talking our swing beast momentum strategy. We're getting ready to release this week. And first of all, if you like this content, please like it. Hit that subscribe button. Put a comment down below if you want to see my opinion on any stock you might be considering in the swing momentum type realm that you would like to see, whether it be a stock, whether it be now, first to be clear, it has to be in the big cap names. So when I say crypto, love crypto, trade crypto all the time. It really works best in the bigger names. So, don't ask me about, some smaller projects, because that'll be a different strategy to take on those than this strategy. This works on the big momentum names, the big market cap names in the equity industry or equity markets. So comments down below. Let's get into it. So the swing beast strategy is, I named it swing beast because it is a swing beast. The thing takes off, makes a first initial move. And then, as you can see, we're talking about Apple here. So, almost anybody who trades Apple or who owns Apple, I should say, an investor in Apple, anytime they got extra money, they're probably going to buy more, because let's just look, how's that done over the course of the last, multi-decades. We're looking at $4 a share 10 years ago, 12 years ago. That thing's at $165 a share. It just keeps printing winners, keeps crushing earnings. It keeps selling more iPads. If you're an Apple fan, you own Apple everything. You love the ecosystem. I love the ecosystem. I'm sitting here with Bose headphones on, but I got my AirPods over there. I haven't tried the new Apple over the years, because these Bose are pretty spectacular. So maybe I'm not the best proponent of that statement. But last week they talked about releasing a new car, and this morning Morgan Stanley came out saying that this could double the market cap, double the value of Apple. And I'm guessing that people are really starting to believe that that's a reality right now. And so since last week, I think it was on Thursday or Wednesday, it's pretty much just it's just exploded higher from there. But what's interesting is, let me talk a little bit more about the swing beast strategy. The swing beast strategy got us in over here. We were buying all the way down at 143.88. 143.88 is when we got in. That thing's currently traded up to 165.70 this morning. Currently trading 165. So $22 in Apple in the course of about a month. In 1 month, $22. That's a pretty big move. Now, you can hit that with a number of different methods. You could go at it with just buying the stock outright and just writing it out. A lot of people do that. You could use the option, which is what I did. You get in and you pay, let's say, $1,000 to control 100 shares. Over here, you're sitting on $3,000 up here. Okay, so that's a 200% return in about a month. Well, also, if you would have gotten into a position in the different style of the swing beast, the bonus part of the strategy, you're actually getting in over here at 154 area, the 154 area, paying another $1,000 for those options, and they're worth over $3,000 as of this moment, or before I hit the record button. So you 200% your money in a month, or you 200% your money in a couple of days. Now, the sure money happens from the initial entry, and the real rocket fuel happens on the breakouts. This happens happened in NVIDIA. You can see took off. You can see it happened in Tesla. You can see it in Microsoft, and all you're really seeing is that it's just taking off, right? It has taken off. Like, these have done it, and that's really exciting, right? Like, okay, Chris, thanks. You're telling me that buying Microsoft was a good deal back in July. Thanks. Really, really swell. Or back in, October, a month ago. Really swell work. Thanks. But I am saying that this is predictable, repeatable strategy that happens over and over and over and over in markets. And what you have to do is you just can't stick with one asset. You can't just trade Apple, or you can't just trade Bitcoin, or you can't just trade Microsoft in every single market regime and expect these sort of returns that we're seeing right here. You just can't expect it because market regimes change. Each new market regime sets up a different characteristic of how an asset is going to trade in that market. NASDAQ right now, NASDAQ's just, let's pull up the futures here. NASDAQ's just blasting off, right? Big day. Obviously, if Apple's up that big, we're going to have a nice up day on NASDAQ. And the strategy works on NASDAQ. Strategy works on everything when you're in the correct market regime. When you are out of it, it doesn't work. And so it doesn't work during these sort of market regimes over here, with these pullbacks. You say, Chris, why wouldn't we be buying this one over here? It's because the market regime was different back then than it is right now. And the cool thing about this is that right now we're entering the most bullish period for equities seasonally over certainly the last 25 years. It's been measured. There's been one-off years where it hasn't been that bullish on the, specifically. So October, November, December 2018, or September through December 2018 is a great example. The market's pretty much crashed straight down, especially in December. It really peaked down in December, and then they turn around and then they, took off again into COVID, and then sold off and then took off again. So you have to understand that there is definitely going to be cycles of big bullishness. And then typically the big bullishness precedes weakness. High volatility to the upside precedes high volatility to the downside. So what you want to do is you want to be starting deploying this type of strategy, a momentum strategy, at the beginning of the cycles versus at the end. Now, depending on how fast we move in this phase, I mean, this is very fast and aggressive. If the entire market performs this way rather quickly, we could find ourselves at the end of the cycle, have a dip. And then, 2020 COVID was a good example of that. We're off and running into the end of the year, into January of 2020, the end of 2019 into 2020. And then COVID happened, sharp decline, and then right back out and on our way again. Right. So I'm not saying that a thing like COVID, the March 2020 sellout from COVID is going to happen again. And I'm not saying it's not going to happen. Just saying that we have to be in a position where those, we want to be out of highly fragile positions, which is extreme leverage at tops, taking, 2%, 5%, 10% risk positions, when we should be taking our smaller risk positions and, rotating into things that are at the beginning of their moves, not things that are at the top of their move. Buying Apple at 166 is not as easy as buying Apple at 144. Okay. Now, another character. So we're in the bull quiet market regime. Because we got bull volatile up here, I think, maybe not, but that's bull, very, aggressive buying tendency. So it could spike there, and we pulled back, and then we moved into the earning period. Now, the interesting thing about the swing-based strategy is it doesn't care about earnings, because when you understand market regimes and the bull quiet market regime, you understand that earnings, if they're bad earnings, you might have a mild reaction, which we did have. So earnings were, I think they were off by, estimate is 124, reported 124, but they were down a 1.5 billion, a little over 1.5 billion in revenue versus the estimate. So, going into it, you got all these, we had this big move, if I recall, the day was up pretty good. Earnings come in, they miss. And yeah, it goes all the way down to 144, back to my entry, goes up to 153, 144. So like a 9-point, almost a 10-point range from that earnings. That's a big move on a $2 trillion stock. That'll wake you up. You just lost $200 trillion. $200 billion. You're up 200 billion, you're down 200 billion. But look what happened the next day. Again, this was a bad earnings report. And look what happened. It got bought. And then it just kind of, you had a little weakness here. This is 1.5 down day. But what you got was this big gap up off the bottom, a miss on earnings that gets bought, and no major selling happens. Okay. And it starts getting moving. We took a look at this. Well, I took a look at this on this day and got in, and it has just been a rocket ship ever since. So I added some calls here, picked up some more calls here, and those have already returned. Let's see where we're at right now on these. About 10R. Well, no, that would be to the peak. So currently, there we go, 10R at target. About 5R, so halfway there in a couple of days. So the cool thing about Swing Beast is you get in where it's safe and comfortable, and you can catch some good moves early. It's always nice to say I got in at 144, right? When everybody else is buying at 155 or whatever. And so it takes off. So this sort of, keep this one in mind when you see how this reacted to news, to earnings, bad earnings, and then see how it traded after that. Because another one I'm tracking right now is AMAT. So AMAT reported, you can probably guess when it reported right here. That would have been last week. Estimates were 196. They reported 194 prop earnings. And then they estimated 6.3 billion in revenue and only had 6.1. So a $250 million miss in revenue. And what was interesting is Friday, it got bid up all the way up to here, sold off. And again, it's getting bid up. So it's not getting sold off. Okay. It's not getting sold off. And it broke out of all-time highs. Let me put this up too. It broke out of all-time highs the week prior, maybe a week and a half, 2 weeks prior, broke out all-time highs, and has consolidated above all-time highs. It came back down to touch it, to test that all-time high, and instantly was rejected and bought up. So that's the sign. That's the bullish confirmation of price action that you want to see in a bull quiet market regime. It means bad news doesn't really matter. Let's see how it looked over here in August. Estimates, so they beat on this one, and it didn't really do too much. See, what was different about August is we're just sitting in this range. It wasn't in a bull quiet market regime. This was a neutral market regime. So even though they beat earnings by 3 cents, and they had that $250 million surprise to the upside too, they beat them. They really didn't do anything. Kind of sold off, maybe rallied a little bit, top of the range, came back down. Again, over here, reported estimate was 151. They were up by 12 cents on that. So even though they, this had a positive reaction, that was the end of a bull quiet regime. This one had a negative reaction because it had just had a couple of positive quarters of positive. So, recency bias, everybody's thinking, okay, well, the earnings are going to be, great or something like that. So, we're estimating 196, probably going to be like 2, knowing these guys, and they miss. And so all the gamblers, for lack of a better term, the people who are looking for, big home run hits on the earnings, get stopped out on it. It doesn't matter for us because we're already we've got better information. They're playing off information that is the earnings, and they're playing off the information that the earnings is going to, they're just betting that it's going to be better than it is. And if it isn't, they're out, right? So that's the weak hands over here. But we have better information because we understand the price action. We understand what price action is telling us. We have market regime holding this holding this thing up, holding AMAT accountable to the market. And they're buying it. People are buying it. Traders are buying it. Funds are buying it. They need it in there. If you want to go look at for example, look at NVIDIA, they're reporting and they're just blowing it away, right? So it's not to say that this does what NVIDIA does. Certainly not. They're nowhere near the company that NVIDIA is, but they're in a space that's limited supply. They have, the supply, but I don't need to go into that. That's not the information that is even interesting. The interesting information is we're in a bull quiet market regime. We broke out of all-time highs. We're consolidated above all-time highs. We washed out. Now, this is where it gets important. This is where price action really gets important. Everybody who sold here is no longer in AMAT, right? If you sold it up here, or even down here at 145, whatever, 151 AMAT doesn't impress you. You're not interested. You don't care. You're off chasing Tesla or other stocks. You're not playing the game that we're playing. We're playing a little bit more of the stretch game. So now when this thing gets back above all-time highs and takes off again, see how it did that, took off, consolidates. When it gets above there, you have the potential to pull an Apple, right? Bad earnings, new all-time high, sell-offs. Sell-offs, gets bought, earnings, mildly entertaining. I don't care about Apple anymore. They're a dead company. They're not interesting. They're not innovating. Holy crap. And there they are, right? So the narratives are things that people focus on, but the price action is telling us that we broke out to new all-time highs, pulled back, and consolidated. And what we also want to look at is the run-up there. So see how it went when this is a very comparable pattern here. Because this one, let's do this actually. This is a great comparison. So we break out above new all-time highs again. This was back at $70 or so, big round numbers. First run, first drive, second drive, 3 drives at the breakout. That took February to November. So like 8-9 months to do just a sideways neutral regime. And then it took off into earnings. And I'm guessing estimate was 17. They blew away earnings, and the traders here's where you see the traders who were fickle. They're like, so actually the earnings was reported here. This breakout, there's traders who just sold the breakout. Once it broke out and it started coming back in, they sold. That's common. But since it consolidated at all-time highs, see how it took off from there. So you go from 70 up to 90, consolidates again. And then when it breaks out again, it just keeps going and going and going and going and going until you're looking at the breakout at 70, it doubles. 146, you're over a double from its breakout. Sideways action. 1, 2, 3 drives pattern, breaks out, pulls back to test it. And if we've seen this pattern before, we should expect to see this thing take off in the next few weeks. It's not an instant thing, but this is one I have on my one that I'm personally in, and it's a great example of being a little bit early on the breakouts that a lot of people are excited about. They catch this breakout and they're really stoked about it. But when you get something like a breakout like that, that's far better. That's a far better way to take the break. I mean, so this one is broke out. You're at 146, makes it all the way up to 158. So a nice $12 move for sure. But we would be expecting to see 175, 180 somewhere if this thing does go, considering the distance we've had on this sideways consolidation to catch up. And, you know, if we're wrong, we're wrong. It's a small risk. These are small risk trades for usually we're looking at a 4, 8, 10 to 1 ratio in reward to risk. So you risk $1,000, you make $4, $8, $10,000 on these trades. And, you know, they're right more than they're wrong, but it's not the highest win rate strategy in the world because it's a high breakout strategy. So lose 1,000, gain 4 or 5,000, lose 1,000, gain 10,000, lose 1,000. Occasionally you can catch the big winners, like the NVIDIA one, which was like, I think that was like a 12-hour runner, 12 to 1 ratio on the NVIDIA when we caught that. So that's what we're doing. All right. If you're interested in this strategy, we are going to be releasing it this week at pollinatetrading.com. Go to the website, sign up. You'll be in you'll be signing up for the free newsletter. I'm getting content out regularly, quite often, multiple times per week now. In addition to the videos, all my tweeting at Chris D Macro. Get on that, and we'll keep you updated on this. One last thing I wanted to take a look at is Bitcoin is, well, not much to say. The world was ending on this candle earlier this morning, and they came in and bought it. Whoever it was came in and bought this morning. Took it down from 56,000 up to 59.5 in about, it looks like 15 minutes. So there's some massive buying going on in Bitcoin right now. I'm very focused on that. I think Ethereum is actually the better looking animal out there on a charting basis. So I'm expecting a pretty exciting end of this month, end of November. All right, everybody, have a wonderful day. I love you all. Bye.